Nejra, we're not very surprised about the rate. What else are we learning?
Yeah, and you've pointed to one thing there, David, which is that these forecasts don't take into account that no-deal possibility. And this is the key thing that Mark Carney is going to have to navigate, because of late there's been a big divergence between what the Bank of England has been forecasting, which is slowly higher rates, but the markets are pricing in rate cuts from the Bank of England as soon as this year, because, of course, in a no-deal scenario, that's what a lot of people expect. And that is what Mark Carney is going to have to address in the news conference. How do they actually forecast this? Do they make separate forecasts based on a no-deal scenario? What will it mean for the pound? We've hit the lowest since 2017 in today's session. And of course, if Mark Carney does come out with a little bit more of a dovish statement in any way, and that puts further pressure on the pound, that of course then could feed into inflation. So he's talked recently about the fact that he really does need to try to illustrate these market sensitivities, and that's what the focus will be. Also, of course, on new growth and inflation forecasts. I mean, the key thing they've said is that the uncertainty means a wide range of paths for the economy. So there could be some volatility during that news conference.
Well, and Nejra, as we see the pound weaken, we've seen inflation expectations pick up. Let's throw up a chart here showing a 3.3% inflation rate over the next 5 years. It's being priced into the market, and you can see it's creeping higher. This would indicate that perhaps the Bank of England has room to keep its rate where it is, or even tighten, not necessarily cut rates, right, Nejra?
Yeah, and Lisa, that's a really good point, because not only are those inflation expectations rising, as you've pointed to, but also if you look at wage growth in the UK, that is positive, real wage growth, and it's been increasing. The consumer is in a pretty good place, but business investment has been slowing, and it looks like GDP is going to slow as well. So there's many different factors the Bank of England has to take into account. The problem, as I say, is that it all is predicated on what happens with Brexit. The Bank of England has been basing its forecast on the fact that there's going to be a smooth Brexit, but in a no-deal scenario. A lot of people, and by the way, this includes some BOE officials, have been coming out and saying that maybe the best thing would not be to raise rates. But as you say, if they were to cut rates or come out with a dovish signal, yes, that could put further pressure on the pound, which further fuels inflation. In fact, Adam Posen was talking on surveillance earlier and saying, look, if we get a no-deal outcome, what's likely to happen is the Bank of England is going to have to cut, the pound will fall, it'll fuel inflation, and then it'll have to hike, and then its credibility comes into question.